Hi everyone, I'm Ken, the inventor of the CTKS method. Each day I seek to give you an edge in the market using professional smart money rules and thinking, based on my more than 30 years experience in financial markets, to assist you to become more of a financial blessing to yourself and those you love. If you want to get the institutional edge, please subscribe and you'll find we have one of the best communities on YouTube. Let's run the numbers. Bitcoin is currently down 0.25% to 24,556. Ethereum is up 0.03% to 1688. In yesterday's video, we covered yield curve inversion. And Masterclass students, we did a deep dive on that particular chart in LV13. Rule 673 from the Masterclass: choose learning and success will choose you. Learning provides a systematic structure, and that's what we're looking at here. The first thing that you need to get in place is the understanding that if you don't have the knowledge, you won't really know what you're doing. And that's the case in all endeavors in life. If you want to play tennis, but you don't know where to hit the ball, you're not going to play tennis very well. If you want to play any kind of new game, but you don't know the rules, you may have beginner's luck, but it probably won't last. The first, most important thing is to understand the foundations of what you're looking at. And then we need context. We need to get ready before we pull the trigger. Actually, we pull the trigger on a trade or investment last, not first. Finding the market's focus is incredibly important because the markets just change chameleon-like every single day, and that means there's always opportunities inside the market. Before you pull the trigger on a trade or investment, please look at being in control emotionally. Professionals have mastered emotional control. In fact, that's literally what it means to be professional. And then lastly, this is last and not first, there are many ways to buy and to sell. For your knowledge inside financial markets, it's very important to understand where support and resistance are. What is support? Is where buyers will step in and support the price. They'll push the price up. Where is resistance? That's where the sellers will push the price down. The buyers and the sellers are always in a tug-of-war match with each other. You may have watched the Squid Games from Netflix. In that particular series, there was a tug-of-war match and the losers didn't do too well. Understanding support and resistance is a very important thing to do. For example, when we look at gold, we can see gold has a smart money buy level from 1807 to 1834, which means that it'll be defended by buyers with rigor. And we've seen smart money actually buy up to the next smart money zone, but that next zone is a sell zone. And you can see it's going flat between 1851 and 1853. You can imagine if you were looking at the chart like this, you wouldn't have any idea as to where the smart money could be stepping in or stepping away from the market. There are many things that you'll need to look at in order to understand if the market is reaching a market-wide turning point, and predicting local highs and local lows isn't always easy, but there's some ways to stack probabilities. But you can only do this if your mind is open and you are learning. We've seen time and time again that junk bonds and high-yield corporate bonds are a very good indicator of risk-on or risk-off sentiment inside the market. You can see here the Nasdaq and Bitcoin. Nasdaq and Bitcoin have been coming down whilst junk bonds and high-yield corporate bonds have been coming down as well. But what happened when junk bonds and high-yield corporate bonds started to turn the corner? The market started to turn the corner as well. There's a lot more that you need to be aware of. For example, the inverse of the VIX can give you some very good signals as to where the market is going. You can see how they're all correlating quite well together. They're not overlaying 100% in terms of this goes up, that goes up. That's not how financial markets work. You've got to get really familiar and comfortable with uncertainty, because uncertainty is where you make the most financial returns. As a trader and an investor, you're looking for consistently reliable signals. You want to understand when markets are getting weak and what that might do, and when markets are getting stronger and what that might do. You need to keep your eyes on these things. And inverse credit risk is a very, very good signal, just like junk bonds and high-yield corporate bonds. In the timing section of the masterclass in TM9 and TM10, I talk about consistently reliable signals and continuously reliable signals. It's very important to understand the markets come into sync and they go out of sync as well. What works at one particular case in the market cycle will not work in another. That's why we have to continuously track the market. Masterclass students, I'm going to put out my chart in LV28. Keeping your eye on this chart, I believe, is incredibly important. And this is the beautiful thing inside the masterclass. I keep it constantly updated. Learning is incredibly important. You need to know how the different statistical measures all correlate or decorrelate with each other. And that may sound a little bit complex, but it's actually not. It only just requires time. When we look at Bitcoin, we can see market structure exists from 20,629 to 20,979. That's where smart money will be buying. Smart money will be buying from 23,142 to 23,226. Currently, Bitcoin is 24,404. We can see that Bitcoin has been rejecting the smart money sell level at 25,403 once, twice, and 3 times. We can also see the trend is weakening at the present moment. That doesn't mean the trend is broken. That just means the trend is weakening. It's digesting its gains. As professionals, we're prepared for sideways action, down action, or up action, because we just let the market dictate to us what it's going to do, because after all, that's the way it's going to work anyway. We can't force the market into giving us anything. We have to move with the market. And we can see that this smart money support line actually coincides with 2 levels of very short-term support as well. If we come down, we would expect to be caught in terms of price around the 23,142 mark. If there's a cascading sell-off, if the tug of war is very, very strong, we may dip through this to the 20,629 level. But of course, we could always go flat. We could just wobble up and down here. And the way that we're doing it is very important. So what do we see here? We've actually cut underneath this support. It's now turned to resistance. That resistance would imply that we're either going to go flat or going to go down. With that in mind, just prepare yourself for some negative price momentum, but don't forget how things can work. You're always literally ping-ponging between different lines. It's just like a pinball machine, really. Price action is always moving in a wave, and we do have the FOMC minutes out just in a couple of days, so that could throw a little bit of negative turbulence into the market. Getting on the right side of the percentage is what is key inside financial markets. If we look at Ethereum with no actual guidance as to where the smart money will be stepping in or stepping away from Ethereum, it's like kind of driving with the windscreen all blacked out. What you really want to know is where is smart money selling and where is smart money buying. We can see that Ethereum, currently trading at 1686, has been seeking to get through this smart money sell level at 1619 to 1705, and it was doing a reasonable job, but it's starting to break down. It doesn't mean that it's over. It doesn't mean Ethereum can't rally from here, but the concept is we must keep our eye on Bitcoin. Bitcoin throws a continuously reliable signal across the entire crypto market. What about if we looked at DOGE? DOGE is quite a favorite within the crypto industry. Where is the smart money buying and where is the smart money selling? From here, we just can't tell. I invented the CTKS Method Standards Certification process to help people to understand where smart money buy and sell levels were inside market structure. To get these specific levels, we actually mark up all of price history, not just recent price history. This is what institutional players do. They understand where the true support and true resistance are. You can see with Doge, there's a level of smart money sell pressure between 891 and 908. Currently, Doge is 873. So you can see Doge has been sold down. The sellers are actually quite strong on Doge, but there's a level of smart money support at 831 to 835. Often what you get, if the buyers can't push through a sell wall, a sell level like this, they actually back off and get the shorts to come in, and they liquidate them and they push through en masse. This is what happens inside financial markets literally all the time. To seek to understand how financial markets are moving, we look at a lot of different things. When we're looking at the Bitcoin shorts, which is this red particular line, we can see the red line has been coming up because the shorts have been entering the weekend. What is this shaded area? Well, it's the weekend. So Sunday, the shorts decided to say, I'm going to come in and short. What have they done on past Sundays? Have they shorted? Yes, they did last Sunday as well. What about the Sunday before that? Yes, they did as well. They shorted before that. What about this Sunday? No, they got liquidated. They didn't short. Well, they shorted on Saturday and they got liquidated on Sunday. What about the weekend before that? Well, we saw a little bit of upwards action, but not like what we're seeing currently. What about the weekend before that? They dropped out. Okay, so you're seeing across the weekends, all sorts of different behaviors can happen. A lot of people say, and I saw this recently on social media, someone said every Sunday the shorts come in and they just tank the market. Of course, that's not true. That's why we look. The key to remember, and this is a very, very important key in your knowledge, from social media you will get distortion, not knowledge. There's so much content inside the masterclass because it requires deep explanation. For example, it's Sunday and we've had 87.39 million in total liquidations. That is a lot. General weekend trading on Sunday is 10 to 20 million. 20 million at the tops, around 15 million on an average, and about 10 million at a low. What we're seeing is a big order of magnitude of leverage trading entering the market, and that's across 36,281 positions. One thing that you must always bear in mind, if you're using leverage, the probability that you're going to whack your account, literally like the mafia, is very, very high. Everybody goes through it, but just trade at spot until you know what you're doing. And let's look at liquidations across the past 24 hours. Total liquidations, we can see they're around 53% long. What about the past 12 hours? That's about 63% long. Let's have a look at the past 4 hours. We can see that's about 68% longs. The longs are getting whacked at the moment, and it's increasing. Nearly 73% long in the past hour. So all the people that were feeling very, very confident that the markets could keep on going up forever got a bit of a rude shock, especially as it's Sunday, because we would expect light trading volumes. What we actually see here, we've got a very short-term weakening of this particular trend. Does it mean it's curling over? Does it mean it's going to zero? Of course not. Price is always moving in a wave. From a short-term perspective, we will find that there's a lot of support on a short-term basis at around the 23,000 mark. But we must look at actual objective dynamic market structure. And if you don't know what that means, you really need to learn about it. Looking at the top 9, we can see Bitcoin is currently down 0.85%. We know that there are always opportunities because price is always moving in a wave, and each different project will get its time in the spotlight. For either good or bad reasons, we can see that Stacks has been stacking it on. Over the past 24 hours, it's nearly up 70%. Conflux, over 45% up. Filecoin, nearly up to 17% up, followed by Neo Vet, Blur, Sol, Clayton, and ICP. When we look at the greatest losers in the past 24 hours, they are LDO, Render, FXS, Optimism, DYDX, AGIX, so many X's in here, Mina, Rocket Pool, thank you Elton, and Phantom. In case you missed that reference, I always think of Rocket Man when I read out Rocket Pool. The last time we looked at the top 8, it looked like this: Bitcoin, Ethereum, Tether, BNB, Binance Coin, USDC, XRP, ADA, and BUSD. What has changed here? Absolutely nothing. They're in the same spots. So why do we look at these? Because we're trying to understand how Bitcoin's gravitational pull, that consistently reliable signal, that continuously reliable signal, is playing out on the major alts. And it also plays out on the minor alts as well. What we actually see is that Ethereum is traveling along with Bitcoin's directional momentum. It's really important to understand Bitcoin's gravity. In fact, when you do, it's totally a game changer. It's often really important to look at the alts because we can kind of reverse engineer where Bitcoin could go to. We can see that Ethereum has lost a level of support through here. It's also lost a level of support through this area. We can see the same kind of thing on Bitcoin. 2 levels of support have been violated. Does it mean it's just going to collapse down? Well, it could, and we need to be aware of that fact. We always think about price going in the opposite direction to where we want it to go first, because that prepares us for risk management. Or else you're just basically hoping and praying, and you don't want to do either inside financial markets. What we actually can see is an over or under exaggeration of this particular sell down. That's what we're looking at in this particular time. Do we look at the stable coins? No, not really, because we want to look at the alts. XRP, you can see it's over exaggerating the downward momentum. It's a little bit weaker at the moment. ADA is holding up quite well. The last time we looked at the next top 8, they look like this: Matic, Doge, Solana, DOT, Litecoin, SHIB, Tron, and AVAX. But there's been a change. SHIB has taken out Litecoin, like this. And why did SHIB actually take out Litecoin's position? Because you saw this over-exaggeration of Bitcoin's gravity. And look at the weakness showing through Litecoin at the moment. When you combine strength and weakness analysis into how you look at the projects that you're trading, it literally is a game changer, and this is all part of pattern recognition. When it comes to learning, also throw your attention on Bitcoin's gravitational pull, that blue line. Is the blue line actually determining the direction of these alts? That's a question for the comments. I would really love to hear your thoughts. This is all part of our AIM process, enhancing pattern recognition. It's very, very important to do. The alts are always under and over-exaggerating Bitcoin's price momentum. It's very important, if you see the alts starting to get weak, pay attention, because Bitcoin doesn't move with the same percentage movements as the alts do. The alts can actually give you an indication of market health. In every facet of your life, if you apply Rule 673, choose learning and success will choose you, you know that this is the way the world works. In order to become great in anything, you must learn, and you must consistently learn. What are the habits that are required for learning to actually take place? You must be persistent and you must be committed. To be persistent and committed, you need to have a good enough reason. When people are new to financial markets, they suffer what I call the light switch effect. They go all in or all out. What you actually want to do, especially if you've just started inside the market, which I believe is one of the greatest markets ever in existence, what you want to do is start small and scale. Just literally start your learning process. If you don't put skin in the game, forget it. It will all be academic learning. You must understand what you're doing, and there's no pain like losing money. That's why you want to keep the pain as small as possible until you know what you're doing, and that will require time, commitment, persistence, dedication. We're all very busy in life doing all sorts of things, but if you come across anything that is worthy of your attention, you must put your effort and energy behind it. A lot of people look at ads and say, wow, this looks pretty good. This guy is going to give me $100 a day, guaranteed, every single day. It's a fantasy. Please never get sucked into that kind of narrative. Everything in this world takes effort, energy, persistence, commitment, dedication. It takes knowledge. If you're simply handing your money over to a random third party, you're already making a mistake. Instead, invest in yourself, invest in your future. A lot of people say, oh, I don't have the time, Ken. I'm just so busy. Well, you can always make time. Just put it this way, Kate and I do these videos 7 days a week, 365 days a year, and each particular video takes 7 to 10 hours to put together. How do we find the time, and why do we do it 7 days a week, year in and year out? Because it's meaningful, because people need assistance. Helping others is what's driving Kate and I to do this 7 days a week. And if you think about it, putting in, say, 10 hours a day over 7 days a week, and never ever having a day off, that's 70 hours a week. That's 2 full-time jobs worth of time. I only say this because if you feel that you can't find the time, you're definitely wrong. You can find the time. You make the time. You don't find it. You can't find a lost hour. You have to make it. And when I talk about finding the time, that's finding the time for anything that's important in your life. All the good things in life take effort, energy, commitment, persistence, and dedication. You can find the time to put in all the effort that you require. If Kate and I can do it, and we're heading towards 60, you can do it. To do things, to be really successful in life, you just need better habits, because better habits create a better life. The CTKS Creed is all about daily positive affirmations for abundance, financial success, and happiness. And a big part of this is starting small and scaling. Don't go all in and more. Know what you're doing and be careful. It's not a race. Take the pressure off yourself. It's all about knowledge and systems. Always remember, life pullbacks give you the strength for the next life rally. Always be dedicated and committed, because you either will win or you'll learn. But never blame. Blame disempowers you. It turns you into a victim. Who wants to be a victim? And always solve your problems with positive excellence. Remember, all results come from the mind, and a better mind creates better outcomes. If you want better outcomes, you simply have to just get better habits. That's all you need to do. Have a great day or night ahead, my friends, and we look forward to catching up with you tomorrow. Bye for now.